So right now we want to get into our first conversation for today, and this is all about insurance. Do you own a motor vehicle? Do you own a car? Are you insured? Do you know the entire process of claiming your insurance in the event that, you haven't been involved in an accident, minor or big? How do you go about that situation? We have seen so many cases in the recent times. Fraud has also, come out to be such a problem in the insurance claim process. But how do you protect yourself? How do you legitimately go through this process? And what do you need to know when it comes to insurance involving your car? That is the conversation we want to have today. And to help us with this conversation, we have in studio one gent. He is Joseph Muongi. I said that right?
Yeah.
There we go. Joseph Muongi, who is the founder and CEO of Online Advisors Insurance Agency. Karibu sana, Joseph.
Thank you so much.
Thank you for making time to be with us this morning. Maybe we could start with social media handles for the benefit of our viewers.
Social media, we are mainly in Facebook as Online Advisors Insurance Agency Ltd.
All right.
Yeah.
So again, if you want to shoot your question directly to them on the socials, feel free to do so. So before we get deeper into this conversation about insurance claims, tell us a bit about, the Online Advisors Insurance Agency. Why Online Advisors Insurance Agency to start with?
So basically, Online Advisors, we started it in 2015. Then insurance was mainly the traditional type of insurance. It was the physical, so you had to meet people in person. So we thought, why not take it online and be able to reach a vast amount of people in a shorter period of time.
And what's been the impact that you guys have seen over the number of years you took this particular route?
Yeah, for us, we can say it's good. So far, the feedback is good. Because, for example, during our earlier stages, we were able to serve people who are far. Areas which, under normal circumstances, would have never reached them. Yeah.
Uptake has definitely gone higher.
Good. Yeah,
all right.
It's been higher.
And from the comparison from the traditional to this online platform, of course, keeping up with the technology as it comes, efficiency, in terms of being more efficient, has that also, have you noticed a change in that regard?
Yeah, it has quite improved. Because from the time we began, it was quite a challenge. Because mainly, as I said, the traditional type, it had a lot of paperwork. For instance, the certificates were the physical certificates. So if you had a client in Mombasa and your insurance company didn't have a branch there, you had to send the certificate all the way to Mombasa.
That.
Yeah. But currently at the moment, it's all digital. So someone gets it via email, they print, and they have the insurance with them.
All right.
Yeah.
Now, let's just get to this insurance claim bit. And from what you have seen interacting with the different clients and people you have been interacting with over the past few years, what is the knowledge base of the population about insurance claims and insurance just as a whole, for those who
as a whole?
Yeah.
From experience, I can say it's little. And most of the people who have experience or knowledge about the claims are the people who have learned through the claim process. Yeah, first you get a claim and then you understand what it's all about. Yeah.
And aside from the fact that, most of them have had to learn the hard way, what other reasons do you think have contributed to this poor knowledge base when it comes to insurance claims from the population? Is it just a situation of, so I'll deal with it when I get there, or just people are not as concerned about, planning ahead?
I can say the problem is two-way. So on the part of the industry players and also on the client side, because when you purchase your insurance, no one explains to you in detail, this is what we expect from you in the event of a claim.
Yes.
And also you on your side, as the person who purchased the insurance, you don't bother
to find out
what will happen. But under normal circumstances, what's supposed to happen? As you purchase this insurance, you're supposed to be given the terms and the procedures. So in the event of a claim, you clearly understand the next steps and what you should do immediately.
Okay.
Yeah.
So maybe I would like for you to just take us through the whole process from the pre-claiming phase to now the accident and post-claim phase. What happens or what is expected to happen at each stage?
At each stage.
Yeah.
So the first stage, of course, is even before you purchase your insurance. So you're supposed to clearly understand what you're buying. So first you understand maybe there are three types of insurance. So there's the third party, there's a third party fire and theft, And the final category is the comprehensive insurance.
Okay.
So,
and what's the difference between these three for the benefit of our viewers?
The benefit of the viewers. So when you have the third-party only insurance, that means it only caters for third-party liabilities, whereby the third party is someone who is not you, nor the insurance company. So in the event your vehicle maybe hit someone on the road, that's a third party. You see?
Yes.
Because now it's your vehicle, which is insured by the insurance company. You've hit another person. So that third-party insurance only caters for such situations.
Okay.
It doesn't compensate you for your loss as the vehicle owner, but it will compensate the person who you've hit. In the event of third-party fire and theft, it will compensate that person, and also damages caused to your vehicle in the event of, or losses caused to you in the event of theft or fire. And then
that is when, as the owner of the car, you're compensated.
Yeah, but you're only compensated for losses related to theft and fire.
Okay.
Now for comprehensive, you have all those, plus now the accidental loss. So in the event of an accident, you'll also be compensated now for the comprehensive.
Okay.
Yeah.
All right. Now, before you continue further with, just this knowledge part and just helping our viewers better understand these different forms of insurance that are there, we want to take a very quick breather, but we'll be right back to continue with this conversation. Just financial responsibility that is involved. Do stay with us. We'll be right back. Welcome back. We are glad you are still with us, and we would just want to pick up from where we left off before the break. Remember, this conversation is all about my roots. Hey. This conversation is all about insurance. Or about, do not text me, you know who you are. But thank you so much for staying with us. Again, any questions that you may be having, or if you're just seeking clarifications, send them through. We will be addressing them in a bit. In studio, hey. Let me sip my tea. In studio, hey, my roots, please. Ngojeni nimalize the interview, then you can come back, okay? So, in studio, we have Joseph Muongi, who is the founder and CEO of Online Advisors Insurance Agency. Thank you for still being with us, Joseph. Forgive my roots. Zimetangaza msimamo leo. But just to pick up the conversation from where we left off, just understanding the different categories of insurance that are there. And I want us to go back to the third-party insurance before we get to the comprehensive bits. Just understand the pros and cons for each category. And, just when we were on break, we're just having a conversation over third-party insurance. And I see so many people taking this option. From your point of view, what do you think allows, or why do people always go for third-party insurance covers?
For me, what I think the first is the cost implication, because the third-party insurance is the cheapest, of course. Yeah. So you can find it maybe in a month, someone can pay 1,000, 1,500, or in a year, pay about roughly 5,000. That's the market rate for the third party. Unlike now, there are other classes where you pay quite a substantial amount, which is usually a percentage of the value of your car.
Okay.
Yeah.
Now, what does a third-party insurance cover?
So for the third party, it doesn't cover you as the owner of the vehicle. It only covers now someone who you hit or property which you damage belonging to another person. Because normally what happens, in the event you hit someone, they'll take you to court. When they take you to court, now that's where your insurance comes in to handle the liability. Yeah.
But in this case, you will handle your own damages.
Yeah, so you for your own damages.
Covers whoever was involved, the third party, literally.
Yes.
Okay.
Yeah.
Now, on to the second category, pros and cons.
For the second category, the only advantage is now you covered against more risk, which is limited to theft. So in the event your vehicle is stolen, unlike for the third party only, you'll be compensated. And in the event your vehicle, burns, you'll be compensated for that.
Does that also fall in the third-party insurance? What is the alternative that is considered for you as the car owner in the third party?
No, for the third party, third party is called third party only.
Yeah. There's
that
no
was the first.
except in this situation.
No, there's no any extra benefit for that. Yeah.
Okay.
And that's also the reason why the price is low. Because in insurance, what they're really pricing is the risk. Yeah.
Okay. So the second category also caters for
third party.
Third party.
Yeah, but now you added losses related to theft and fire.
And fire.
Yes.
Now, looking at the comprehensive package, pros and cons.
Now, for the comprehensive, the main advantage there is the peace of mind.
Yeah.
You're along the road, in the event you're hit or you hit someone, at least you're covered.
You're covered.
Yeah. You're covered now for the damages. And when you analyze it, most of the losses are related to the accident. The theft is really slow, and also fire. Those are rare scenarios, but accidents are really high.
Yeah. So in the event of an accident, all damages to your car are taken care of, and also the third party.
Yeah, also the third party.
Okay.
Yes.
Now, when it comes to the claim process, this is now where there's a lot of gray areas. We have seen so many cases of fraud, and especially in the recent past, with technology come into play. As an industry player, to what extent is fraud a problem? Double cases of double claiming, or getting insurance from different companies under different categories. How is that?
So according to the reports from IRA, fraud was one of the leading causes of losses to the general insurance service providers.
Okay.
And they're really trying to mitigate some of these common challenges, because currently in the event of double insurance, this is catered for by the new digital certificates, whereby for you to apply insurance to another company, you have to cancel your current insurance. So you can't be insured by two companies at the same time.
But you find people wanangojeanga hii insurance inaenda kuisha, then that last day or two, you find that there's that overlap. And conveniently, something happens during that time.
During the last day. The last period.
Yes, there's a slight overlap, a day or two, when the previous insurance may have been expiring, or you cancelled it, and then you take on another. Such issues, how are they being addressed, especially with this new shift to the digital platform?
Because in terms of the digital platform, you can't even mess with one day. So
there's no overlap whatsoever.
There's no overlap. If your cover is expiring on 9th, the only way you can get another cover is if the cover is starting on 10th.
On the 10th.
Yeah.
Okay.
So you can't mix the two in this scenario. Because before you could be able to do that.
Yeah.
In fact, even before you could even get insurance from 3 companies. Because you could find someone gets a PSV cover from this company, a private from this company, and another cover from another company.
Yes.
So in the event of a claim, this person can be able to fraudulently claim from the different companies.
Insurance, and actually gets the payout.
And then gets the payout, which is illegal, because insurance is supposed to return you to your original position. So now you're profiting from a loss, which is not a principle of insurance.
But people, on the other end, there's someone who's enjoying that whole situation.
Yeah, because for them it was maybe business as usual.
It's a big day to cash in. But now, looking at also the claim period, some people take time, some people are immediate when it comes to claiming, immediately when the accident has happened. As an industry player, the time frame that one can effectively put in their claim and get proper service towards the end?
Because for me, ever since we started, claim has been one of our main challenges. Because it's not something which we've been able to predict substantially, because we find different claims, or almost similar claims, but take different periods to be sorted out. So some of the delays are caused on the client side, some on our side, and others on the insurance side, and the other service providers, let's say the garage, the assessors, the investigators. So for you to be able to efficiently predict how long the claim will take. It's quite difficult at the moment. Yeah. So we've been lobbying and proposing for digital processes whereby we could be able to track maybe where the delay is coming in and how it can be corrected. Because that's the only way we can be able to sort this out. Because there's no easy way of saying this is what causes the delay to happen. Yeah.
Because in most cases, there's so many parties that are involved. The third party, the police, this insurance having to deal with other insurance companies. But in terms of just creating a harmonious way of handling this whole situation, what would you suggest as an industry player that would sort out these issues, cut down on time? Because at the end of the day, you as the industry player have a role to play. The car owner has a role to play. All these other stakeholders have a role to play. But how can you make this situation harmonious and, you know, as efficient as possible?
For that, we've actually even come up with our own product, which we launched to the market. It's a website purely dealing with claims. It's www.claims.co.ke. So from this website, what we're trying to do is increase the efficiency. So whereby immediately you get a claim, it can prompt you what to do next. And it gives you all the documents.
The next step that you need to take.
And all the documents. Because you find you have a claim, you're supposed to fill in a claim form. So where do you get this claim form from? You didn't have it. So you have to call the insurance company, have someone maybe scan it to you, send it via email. But you should be able to easily download it, get access to the other service providers. Let's say it's the breakdown. Tows your vehicle from the police station or scene to the garage. And from the garage, have someone follow up. Was the assessment done? Was the repair authority given? And when repair is complete, immediately, you know, they need a release letter. So you can find that even wastes up to 1 week. So, but with the system, it's able to prompt you. And what we're really trying to do is increase now the efficiency in the value chain.
Now, on the responsibility of, let me use myself as the car owner, what do you as my insurer need from me to hasten the process?
So first of all, of course, is the good faith. So in the event of a claim happening, you report immediately and don't try to fabricate, because there's a challenge in the market. Let's say you have a claim, you try and gain more. You see,
maybe
your car was old kidogo. Unaona, wacha nipigiwe rangi gari yote instead of just the bumper, try and exaggerate the losses. So that's the first step. And then the next step is quick response and quick reporting. So immediately your accident occurs, try to contact the insurance almost immediately. Because now once you contact them immediately, it reduces the chances of suspicion of fraud. You say if your accident happened 2 weeks ago and you're coming to tell us now, so there's something fishy there.
You put in room for...
so you can be able to modify the facts, you know. But once you do it immediately, you get the claim forms immediately, the garage is notified immediately. You see, so the main delays which will happen will be understandable, and they can easily be mitigated.
So how do you determine how you go through this process? What are some of the key factors that you consider as the insurer looking at this claim process? In as much as, you know, I, as the owner of this vehicle, have presented my case, what are some of those key factors that you use to determine as to whether you're going to fulfill this claim or you're just not going to follow through with it?
Because now the first thing, immediately the accident occurs, you're supposed to report it to the police station. Because there's no insurance company which will accept your claim.
Liability,
without the police abstract. So they'll need that. And once you get the abstract, the next thing they'll try and verify is who was driving this vehicle at the moment of the accident. So of course, it's supposed to be someone who is licensed. So those are some of the basic factors. And then in terms of the compensation, what a lot of people fail to understand, that falls in on the role of the insurer. So let's say on our end, we're the intermediaries. Our main role is to make this process seamless and more efficient. But now in terms of the underwriter, who's the insurance company, they have to verify if the claim is payable. Because in the event maybe the cost of repair is low, the insurance company won't come in. And that's what a lot of people don't know.
is there like a mark that is considered to be, this is low, you can take care of it yourself, and from here we come in?
Yeah, so it's usually there, but a lot of people fail to understand it, because also the term which is used is quite unorthodox, or vague to say, because they'll tell you it's called excess. You know, for you,
excess damage to the car.
Yeah, no, they just call it excess. What that means, if your cost of repair is below excess.
And what is excess? I think that's the gray area.
Yeah, that's the gray area. Because when they call it excess, it's difficult for a lot of people to understand.
It's different to every individual.
Yeah, because what excess means, be above this amount is what we will cover as the insurance company. Below this amount, you're supposed to take care of it. Yeah, and it's usually in the policy document. Yeah. When you read your policy document after purchasing insurance, which unfortunately most people don't get the policy document, it's usually stipulated there. It can be something like 4% of the value of a car.
Value.
Or a minimum of, let's say, 25 or 30,000. Okay. So they'll put it there. So that means if your vehicle is damaged and the cost of repair is 20,000, there would you sort.
Boss, gari yako, see you. Yeah. There's Christine who's asking, what is the average payout period? I have been having issues with my insurer for the longest due to the payout.
That's exactly what I was telling you. Because also us as an agency, we are finding it as a challenge. Because you see, we have a pool of clients with different insurance companies. So there's a certain claim which we take. In less than a month, everything is sorted out, even sometimes 3 weeks. And we currently have some claims from November and December, which are yet to be sorted up to date. And yet, on our end, we did everything. The due diligence was okay. But you find the main challenge is because once we had a seminar with IRA, and they gave out a timeline of 90 days.
For the payout?
Yeah. So after you've done everything, the insurance has up to 90 days to sort you out. Okay. Yeah, but also the 90 days is a lot, considering that maybe was your vehicle which you're using and it's totally damaged. So you have to struggle all these 90 days. Yeah.
Okay. There's also Intel who is asking, what if I was not driving my car and I have the comprehensive insurance?
In that event, you'll be compensated.
In the event of an accident, I believe.
What you do, when you're filling in the claim form, you will say the person who was driving was authorized by you to drive. So as long as the person had the driving license, you'll still be compensated.
Okay. Yeah. There's Anna who's saying, this is on Twitter, by the way, hashtag is still Good Morning Kenya. Keep them coming through. We appreciate them. Anna is saying, my mom's car was involved in an accident. My brother was driving it, but the insurance took over 6 months to compensate, and consequently, the insurance cover ran out. What do I do in such a situation?
Because in the event that the claim happened when you still had your insurance, you still be paid.
But they took 6 months.
If they take 6 months, and the cover expires,
it expires.
No, you're supposed to renew it. If you're still using the vehicle, you're supposed to renew it. But if the vehicle is still in the garage, you're supposed to wait. Now, once they're done with the repairs and they issue back your vehicle, you can take the cover. So you are the one to choose if you'll take it still with the same insurance company or you'll take it with another insurance company.
So if the cover expires while the car is still at the garage, hasn't been fixed, the insurance company will still fix it, even if
they're
the cover
supposed to fix it, because the accident occurred when you had the insurance. Covered. Yeah, when you're still covered. So there's no point of you buying insurance and the vehicle is not on the road, because now that will mean you're wasting your money. Because if the vehicle still stays in the garage for 2 months and you paid for insurance for 1 year, so that means you've lost 2 months.
Okay.
Yeah.
I also have Rispa who is asking about ambulance chasers and insurance. This is something that even a friend of mine experienced just the other day, when a random person you see, nowadays people stop watching too many movies. Somebody just jumps in front of you and claims you hit them, and consequently they want to be paid. They're called ambulance chasers. Does the insurance have any role in such a situation, and in the event that there's also damage to the car?
If you had comprehensive...
Like the windscreen is cracked or something like that.
Of course, if you had comprehensive insurance, you'll be compensated, you know, as long as the damage is above excess. You know, remember the excess which I was telling you about. As long as the loss is above excess, you'll still be compensated. But in the event of the person who you've hit, that now has to be a case, you know. It has to be investigated. And in most cases, these end up in court. And for us, from our end, what we understand about ambulance chasers, it's different from what most people in the market refer to them. Because for us, the ambulance chasers are the people who follow you after an accident to handle your case. You know, they tell you, hey, umegongwa na gari, I know a lawyer.
We can get this out of that.
You can be paid 300,000 here, pesa kidogo. Just come in, we won't pay anything, we fill in the forms. So those are the ambulance chasers. So they mainly follow up on accidents, and they usually take the cases now to the lawyers, and maybe they're given something small. But now those now are the third parties. Now they claim for you from the insurance company.
Okay.
Yeah.
So wale wanajirusha mbele yako intentionally, be very careful. Be very careful of such. And if you have evidence, this is why I encourage people to have dash cams. If you own a car, please, a dash cam is important. And this brings me to the next aspect of evidence at the time of the accident. How much of that is necessary for you as the insurance provider?
What I can say, the provision of evidence increases efficiency now to the claim process.
Okay.
So let's say you had the footage, video, you had a car tracking report. It usually verifies things quickly. It reduces the need for a lot of investigation, you know, asking a lot of questions, going to the scene. Because once you already have the video, it's clear evidence what happened. Because in some scenarios, there are very weird accidents which occur. When you try to explain to someone, it seems as a very far-fetched story.
Unless you actually see
Unless you have, you know, once you have the footage, let's say your vehicle hit a goat, and then after you hit the goat, you hit a fence, and then you hit someone. You see, when you're trying to explain that, hey, someone says, there's something here.
Then the blame now shifts back
to you. But now, once you have maybe the footage, it increases now maybe the efficiency in that.
So is it advisable to always have that footage, or it's something that you can do without?
It's something which we usually recommend a lot. Because in fact, even in our platform, we're trying to partner with this type of service providers, and currently what we're mainly proposing is the GPS tracking. Because that's really key. Even in the event of theft, it really helps you even save on your costs. Because once you have this insurance, you see you're not still covered 100%. So let's say your vehicle was stolen and you didn't have a car tracker. And you're supposed to be paid, yes? But the insurance will say, you know, on your side, you didn't take a lot of mitigation. You know, so what we'll do, we won't give you all the money. We'll give you 80%. And it's there in the policy document. But in the event you had a tracker, they'll say, okay, here you tried kidogo. So what we'll do, we'll just retain 5%. We'll give you 95%. So it's usually there in the policy document. Mitigation techniques on your end are also rewarded by the insurance company.
All right. What of those who are in the cabbing business? And you know, we're living in a time where we are aware of some tiny vehicles that are very efficient for business, and this is mostly for cab business, but in terms of their safety, what forms of cover would you recommend that they go for that would consequently be of benefit to them as the car owners and also the third party that would be in the event of an accident?
So for those fall under PSV. So the first thing they should purchase is the PSV chauffeur-driven insurance. So it's a specific class which was formed by the insurance companies catering to this type of vehicles.
The cab.
The cabs.
Cab biz.
And in fact, the ones using the digital apps, they get a special rate, not like the normal taxis. You know, because now these are more controlled.
Legitimate companies.
And the assumption is also the risk is lower, because if they have a client, the client ordered through an app, so the chances of maybe hijacking are lower. So they get special rates, and also the covers look different, the certificates. So, and they also insure now the passengers. So in the event of an accident and the passenger is hurt, your insurance company will compensate your passenger.
So know this information. Kuna wale wanampanga tu nasema, as long as I'm registered with this cab company, mi niko sawa. Take precaution, go the extra mile. We have Mimiku saying that when disaster strikes, filing a claim may seem like a daunting prospect. Most of us don't know that much about it and don't realize that both sides have a role to play. You have a role to play as the car owner, and also your insurer has a role to play. Now, as looking at where we are progressing with digital technology, with this form of information that we are coming on with, as an insurer, do you think we'll get to a time where insurance is something that cuts across even different forms? Because looking at accidents that involve different types of motors, bikes, cars, trailers, bikes on bikes, is there a time that there will be a cover that caters for all these groups without looking at the value of this particular car compared to this, that consequently will compensate you kidogo because the accident was from a smaller form of motor?
What I think, at the end of the day, they still have to be separated because the risk profile is different.
Yeah.
Because the risk experienced by the person riding a motorcycle and the risk experienced by the guy driving a trailer, they're quite different.
Yes.
Even the exposure, even in terms of the loss. So in the event a motorcycle is stolen and a trailer is stolen,
yes,
there's no way these people could have paid the same amount for because the risk is different and the exposure is different. What I think can change is the pricing of these risks. Because currently, there's no benefit or segregation in the market whereby a good driver is rewarded instead of a rogue driver. Because let's say currently both of us buy a vehicle, the same type of vehicle, we go with it to the same insurance company, under most circumstances we'll be given the same rate because they'll just look at the vehicle, but they won't look at the drivers. So let's say maybe me in the past 15 years, I've had 0 accidents. You in the past 15 years, you've had about 10, just to say, for example. So that means in most cases, your risk is higher, in terms of the insurance company. So for them, they look at the vehicles. The vehicles are the same, but the drivers are different. So I think with time, what they'll start doing is collecting what we call big data. With the data, you're able to analyze maybe the historical events of this particular person, their driving behavior, and then price your risk based on that. Yeah. And I think that's the next step where we're supposed to be going.
Okay.
Yeah.
And this explains this whole situation where you see cars bought the same time and you find that this insurer will cover this person all the way and the next person is not covered all the way due to their experience with them.
Yeah.
Okay, that's enlightening. So as a driver, we've been talking about these refresher courses that people need to be taking after a number of years after driving, keeping up with the different changes that are coming in the industry. So this goes ahead to let you know that your carelessness on the road, to some extent, will affect some of these issues, especially when it comes to the insurance claim. Keep your feedback coming in. We continue to sample them as we continue on with this discussion. I have Antier, I hope I said that right, who's asking about courtesy cars. Which package do they are they considered, and up to what's the amount of time that you are allowed to stay with a courtesy car?
For the courtesy car, this is an extra benefit. You're supposed to pay extra for it. After purchasing, it's mainly under comprehensive.
Okay.
So, because for comprehensive, it's covering against accidents. Because the meaning of a courtesy car is this is the vehicle you're given when your vehicle is in the garage. But now the main problem which we have with the courtesy cars, they have a limited time period, which is mostly 10 days. And for you to be covered for that, you pay around 3,000. And also what a lot of people need to know, the courtesy car is only applicable for private vehicles. You see, you can't have an accident with a PSV and then you're given a courtesy car. You go
demand for one.
Yeah, and then you go carrying passengers, because mostly it's a private vehicle. And then the limitation is, so your vehicle has been in the garage for more than 10 days. So the company which issued the insurance company this vehicle, they'll tell them, hey, boss, your 10 days have lapsed. Give us back our car. Yeah.
Even if your car is not
still in the garage. Yeah, because it's a contract which is stipulated. They said you'll give us 3,000, and us we will take the risk. And say in the event your car is garaged, we'll give you a car for 10 days. Now we're assuming the repair will have been completed in this period. Yeah.
And in the event that, the repairs are not yet done and they now demand back the courtesy car, do you have room to pay for more, or that's the end of that particular deal unless that particular cover lapses and you have to renew it?
Under most circumstances, it's limited to the 10 days. But some insurance companies are able to discuss, they can say
flexible.
But you'll have to maybe pay something extra.
Some more.
Yeah.
Okay.
They can tell you maybe pay this extra amount. We can be able to negotiate with the guys providing us with the vehicles, and we extend for a specific number of days. Yeah.
And in the event you get into an accident with the courtesy car?
No, the courtesy car has insurance. So now it's the insurance of the courtesy car will cover the courtesy car.
And then you get another courtesy car, and then you get into an accident.
Yeah, no, you're bad
that
risk.
That become a risk. All right.
They might refuse now to renew your cover. Or what they usually do, they charge you more. Because in real sense, when you're charged more, you say, apana, these guys, apana, let me move to another company.
No, this one is a problem. Now, as we draw the conversation to a close, maybe just your message to our viewers this morning when it comes to understanding what they need to know before you take up any insurance cover, understanding the claim process, and, the fact that information is a gap that people don't really go after, especially when it comes to this insurance and the claims. As long as you have paid, you're good to go. Importance of the knowledge base and what you need to look for when you're picking up an insurance company.
The main thing which I can say is over and above the price, because that's what a lot of people look at. Because even us, like for example, our company, we represent over 10 insurance companies. So when someone comes and asks about maybe private vehicle insurance, we tell them, we have all these 10 companies. They say, no, stop, just give me the cheapest. Out of all those, what will cost me the least? So, but you can find the company which gives maybe the best rate in terms of the service, usually not the best in most circumstances. Because and this can be attributed maybe to the large pool of bad risks. Because if you're the cheapest, everyone comes to you. You're not mitigating this. So you get about 1,000 clients. Out of these 1,000 clients, 600 come with claims.
Imagine that.
So what that affects, it affects your efficiency first. Because the guy in the office, in the claims office, has about 20 to 50 files every day.
Yes.
So in terms
of claims.
Of claims. In terms of processing this, you get a challenge. Also now, and then at the end of the day, the financial implication. Because we've experienced this with some companies. They come in with a very good rate, you give them a lot of business.
Cheaper than most.
Yeah, cheaper than everyone. So everyone moves. Your client tells you, hey, I had this company, but they reduced the rate. Why are you still giving me an expensive cover? And the company is good, so you transfer them. So after 2 years, these companies are hit with very huge losses.
Claims,
the claims process are affected. We get really maybe poor service, from the company. But the company was good initially. And then now the company starts to struggle.
Yes.
And for it to mitigate that, they cancel. Maybe they say from next year, we'll increase our rates, even higher than everyone else in the market. So that we are really discouraging. And the rates will increase only to people who've had claims. The good clients, we won't increase for them. But if you had a claim, I will increase your rate.
So cheap is not always a good option, especially if you're looking to insure.
To insure. And then also another thing is just get the general market information. Because there's a lot of stereotypes within the market, Your first impression of insurance, a lot of people say insurance nyukora. Insurance is a scam. But they're very good to you, when you come in. But when you get a claim, those guys will really mess you up. So, you avoid these stereotypes. You just get the facts. Because when you visit like the IRA website, they publish all this information. They say these insurance companies experienced this amount of claims, they paid these claims, and this is their claim ratio. So even with that, you can be able to know your probability of being compensated.
And it would help you pick an insurer.
Pick an insurance company. And also in the media, we currently have companies in court.
That are being sued?
To a level where they're about to be auctioned. For you to find yourself in such a company, it's a deal done. In the event you get a claim, they have claims from 2015 which they haven't sorted. So how will you be sorted now? So it's also good for you to do your due diligence and also maybe get someone within the industry to give you the facts, not the opinions. When you come with me for an opinion, I'll tell you what I want, you to know.
Of course. In business at the end of
because
the
I'm
day.
in business. But when I give you the facts, I tell you, okay, I'm telling this company is good, but here are the numbers.
Okay.
This is what they've done. These are their claims. This is the claim ratio. And then from there, now you make a judgment yourself.
Based on the facts that have been presented to you.
You see the cost, you see the service,
Yes.
you do your cost-benefit analysis, and then you say, no, I choose this based on the information which I have.
Get facts, not opinions.
Yeah.
At the end of the day, you and your relationship with your insurer will determine how far you go. And you don't want to go halfway through the journey, then you realize it's a scam, you know? And then more so in the event that you get into an accident. So that brings us to a close of this conversation. We do hope you are better placed when it comes to picking up an insurance company, the kind of cover that you need to pick that is, you know, covers you and is effective and efficient for what you need and the situation as it is. We have been speaking with Joseph Muongi, who is the founder and CEO of the online Advisors Insurance Agency. You can check them out on social media in the event that you need more information that borrows from this conversation. Thank you so much, Joseph. We wish you the best as you continue on with this journey.
Thank you so much. It's a pleasure.
Now, we want to take a very quick break, but we are not yet done with Good Morning Kenya. Do stay with us. We'll be back.